How about Jerome Powell's speech on Friday? And of course, we can talk about rates and all of that. But folks, first, I am so happy to be back in the studio with the whiteboard. Excited to announce that I have finally scheduled the virtual event for February. More on that in a minute. But folks, I want to thank you for being a part of One Rental at a Time. My 3 weeks away in Europe was awesome. Maybe more on that in a minute. But let's jump into the daily financial news for December 3rd. Folks, 28 days left in the year. It flew by. Hope you have enjoyed it. If not, you still got 28 days. We can make some things happen. So first, let's talk about Jerome Powell's talk on Thursday, the market reaction on Friday, and what the heck might it all mean for real estate. First, Jerome Powell came out and was more dovish than the market has expected. Remember, we have talked about the Fed having 2, maybe 3 tools. They have their every 6 weeks, they can adjust interest rates. You and I both know they are done. Second, they have their voice. And I think a lot of people were expecting Jerome Powell to come out and be hawkish. He was not. And for the record, number 3 is QT or QE. QT is continuing. But what is going on in the background? I believe what is going on in the background is a couple of things. First and foremost, as we have here, Nikki Leaks, again, Nikki Leaks, shout out, meet Kevin for that nickname, is a Wall Street Journal reporter who seems to have the inside track to Jerome Powell and his cronies. What did Nikki Leaks say in a tweet over the weekend? I want to make sure I read it correctly. Here it is. The Fed thinks they are done. Just don't ask them to put it in writing. This is exactly what I've been trying to share with you for the last 3 or 4 months. The Fed can't say they're done. The Fed has to act, dovish, hawkish, to keep the market guessing. The market has said enough. We're calling your bluff. So what happened to end Friday? The 10-year note crashed to 4.2, and I use the word crash on purpose. 2 weeks ago, 2.5 weeks ago, it was over 5. The 10-year has fallen 15%, right, if you do the math. That is significant. What about mortgage rates? Did you guys look at this on Friday? This was crazy. The 30-year mortgage rate came in at 7.09. Wasn't it a month ago it was 8.03? The 30-year mortgage rate is almost down 1%. What I really want to call out is about 2 or 3 weeks ago, before this started, I put out a note, you can go on my Twitter feed or X feed and see it, that I thought interest rates would be below 7% by the end of the year. And boy, oh boy, did I get some hate for that tweet or whatever you call it now. Folks, we could see sub 7 next week. So again, what people failed to miss and what I saw coming was the Fed was done. And also, what have we seen is we've seen once the Fed is done, banks are collapsing the margin, and we have just started. The margin between the 10-year and the 30-year was over 300 basis points for seemingly 9 months. It is now, last checked, under 290 and going lower. And as you know, historical average is 180 basis points. So we still have plenty of room to come in once the banks believe they're done. Now, being right on mortgage rates or seemingly right on mortgage rates heading into the end of the year, what does it mean for housing? Well, I think it's much to do about nothing. I think a lot of folks that were interested in buying homes and left the buying process when rates hit 8%, I don't think they're coming back in December. December is the time where people focus on family, focus on finishing the year. They are not going out looking to buy homes. So as rates come in, if you're in the real estate industry, I do not, let me be clear, do not expect demand to explode. Will you get a marginal buyer here or there? Of course you will. So you may get, I don't know, an extra 5 or 10% of activity. But I think so many people are tired, so many people are burned out, so many people are frustrated that we're not going to see any real activity like this year until February. I want you to understand what I've been trying to paint the vision of for 6 months. What happened? Rates went up, demand fell off. Rates went up, builders stopped building. Rates come down. We head into the spring. Rates are 6.5. Building is slowed. What do we think happens? I believe, and I believe I've called this for at least 6 months now, 2024 spring selling season 2024 will be very similar to spring selling season 2023, which meant bidding wars, not activity. Again, not on luxury, on the entry-level first-time home buyer homes. It just feels like we're set up for the same story. And unfortunately, we are even going to have less supply of new homes. New homes, they stopped, right? They don't want to play at 8%. So again, it will be very interesting to see where housing goes in the spring of 2024. Already talked about Nikki Leitz. How about Don Moen and Grant Cardone? Let's do Grant Cardone first. I don't know if you guys saw this, but Grant Cardone put out a 6-hour, master class or video yesterday. I watched the first 20 minutes or so. Why is that video important? Grant Cardone has admitted that he changed his mind. Right in the beginning of the video. He says if he had to do it again or if he was doing it now, he would go buy a fourplex. Grant Cardone would house hack. I have said this for a while. Dion, Matt, and so many others. House hacking can be the way to go. Why is Grant suddenly on board with fourplexes? If I take him for his word, it's because you can live in it with 5% down. FHA's new guidelines say you can house hack a fourplex, meaning live in one of the 4 units, and get on the property ladder. Folks, whether you like it or not, the way to get wealthy is owning assets. If you want to sit back and bitch and moan and complain, fine. If you want to get wealthy, do the work, figure out a way you can get on the ladder, and start the clock, because it takes 10 years. It takes 10 years to get wealthy. And starting with a fourplex, as I've said for years now, is something I wish I did when I was 20, 21, 22. It would have changed my life. My journey doesn't start till 30. If you're in the game starting young, house hack a fourplex. And now you have Grant Cardone pushing it. I can only imagine the more and more Grant pushes fourplexes, the more and more activity that might be coming. So I thought that was very, very interesting. The other thing I took away from that first 20 minutes is Grant sees a lot of pain the next 2 years. Now, I believe, kind of sparsing his vocabulary, that a lot of that pain is in commercial. He's talked about 10% of his portfolio or thereabouts having terms come up that is going to be painful. But what he is doing is plans to buy stuff throughout the cycle. He is going to buy with cash. So he no longer has debt, which is an interesting way to go. But that is what he is going to be doing. But again, he sees a couple of years of pain, asset prices coming in on commercial, no building, and then in a couple of years, rents will explode because we have no building. That is essentially Grant Cardone's thesis. My quick summary. If you watched the total 6 hours, let me know if I got it wrong. I don't think I could watch 6 hours. How about Don Moen? You may not know who he is. I did not know who he was until I saw an interview with Bloomberg. He is the founder of Pretium. Doesn't matter. Why am I telling you about this guy? He is the largest owner of single-family homes in the country. Yes, folks, I didn't know who he was, and he is the largest single family home owner in the country. He stays pretty quiet, I'm guessing. So what did he have to say? He says, nationally speaking, we are short somewhere between 4 and 7 million single family homes. Second, boomers are staying in their homes longer. Millennials are forming households faster. We have had lack of building since '09, and we will have lack of building the next couple of years, a la Grant Cardone. We have seen a massive relocation of income. For example, people moving from LA to Phoenix. Now, these LA folks that come in think Phoenix is cheap. You have seen prices rise, thus taking the locals out of the market. It becomes unaffordable. And then lastly, Don thinks that mortgage rates or rates will come down starting in Q2 2024. So again, it is very interesting to see what these folks are looking at. Again, I think we need to watch lack of building. Remember that conversation I had with Lance Lambert seemingly 9 months ago about builders backing off? I told you, I said, that's going to be a problem in the spring. And sure enough, we are going right around the corner, and it looks like it is going to be a bigger problem than I expected. The week ahead, yep, it is Sunday, so let's talk about what is coming up next week. We got factory orders on Monday. That will be an important number because it goes into GDP now. Is it contracting? What's going on? Again, we had a 5.2 print for Q3. What are we calling for Q4? Next week really is about jobs, jobs, jobs. And we start off Tuesday with what's called the JOLTS report. Think about job openings. Last month, this is from memory, so I could be wrong, surprised to the upside pretty significantly. So we'll see if the jobs number comes in. Wednesday, we have the ADP report. We will see what's going on with private payrolls. We will see if there was any adjustment because of the strikes. Then on Thursday, we get weekly jobless claims. And on Friday, it is the big number. It is non-farm payrolls, the unemployment rate, and all of that. So again, this week is all about jobs. Again, like last month, we want these numbers to be lower than expected, but not negative, if you know what I mean. We don't want to blow out the number like we did a couple of months ago, because that would be a reason for the Fed to get hawkish. So next week is all about jobs. The following week will be about CPI and PPI. How about market expectations? This is wild. Wild. Last week, so say 8 days ago, the market was expecting 3 Fed rate cuts starting in June. As of Friday, the market expects 5 rate cuts starting in April, leaning towards March. Yeesh. Yeah, I expect Powell to come out next week if he can and get a little tough, but we shall see. And then lastly, folks, I have finally scheduled the virtual event. Again, we sold out the 2-day event in Vegas. Now I have just published and will link below how you can register for the online event. And as promised, as communicated, I have made it only $99. You will not be able to network. You won't be able to do a lot of stuff. So it doesn't make sense to charge the full boat. So we are having that out at $99. It is on Eventbrite. I will put the link below. We only can do 500 seats. So just like the main event, I expect this to sell out and sell out quickly. Lots of you can't travel, family, work, commitment, but you wanted to be a part of this. I'm so happy to make this available. We're spending extra money to get another team to come in just to run the Zoom. So it will be taken care of by a couple of individuals. I won't have to do everything. So I'm so happy to do that for you. So again, I will put the link below. Please do me a favor and sign up so that we can make this event, so I can break even, frankly. So lastly, I got a lot of people to congratulate. Some golden tickets, some black cards to send out. A lot of you were getting deals done while I was gone, and I wanted to make sure you get your recognition. Steven, congratulations on your golden ticket. Your card will go out in the mail. Mark, you got a couple of deals done. So Mark, here is one. Here is two. And bingo bango, number 3. Mark, congratulations for your last 3 deals. Nick, congratulations for your golden ticket. And then finally, Paul, congratulations for your card, folks. Folks, if you don't know what these are simply cards that I send out when you do the work and you close the deal. You can only ever get 1 golden ticket, but you can get as many of these black tickets as you like. If, for example, Mark got 3 today. So, folks, I hope you have an amazing day. It is Sunday, December 3rd. Don't forget, sign up for the virtual event. It's going to be a lot of fun. Bye.